Welcome everyone to this educational video where I'm going to explain to you a trade that Megan has executed on BABA using a strategy that is named Higher Timeframe Trades, or in short HTF. This is one of Megan's main strategies and it is mainly built on analyzing bigger time frames, which is the weekly chart and daily chart, and then basing your entries using smaller time frames. You can see a screenshot of the trade right here. One of the main things that you need to do if you want to be a higher time frame trader is analyzing the daily chart and the weekly chart really well. And in this case, when Megan was looking at BABA to execute a trade, she started by analyzing the daily chart. And you could see that on the daily chart on BABA, we had some particular range that was formed for around 2 weeks, and today it gapped up into this range. So the support of this bigger time frame range could now start acting as a resistance. And because we gapped up today, there could be another strategy that is played that is named a gap fill. So first of all, you are gapping into a previous support that's acting as a resistance that you can bounce from and play a stock to the short side. The second thing, you can play a gap fill strategy. Going to a smaller time frame, which is the 5-minute chart, you can see that there was a particular range being formed on the 5-minute chart, and the break of this range to the downside could solidify your idea that you have based using the bigger time frames. Now, when Megan is looking for a trade to execute, she usually is looking also for pivot points. And at this particular area, there was an R6 level. So Megan was looking for a break of this R6 level, which also coincides with all the analysis that she did previously. A range based on the daily chart, the stock gaps into this range and the previous support could act as a resistance, after which we could drop to the downside. A 5-minute range, the break of which could give us some momentum for a stock to sell off, and also a pivot level to play the break from. So let's go to the trading terminal, replay and recap this trade and analyze it just to see exactly what Megan saw and how she managed this trade. So you can see that this was the range that Megan was looking for on the 5-minute chart, and the break of this range approximately would mean that we can get some momentum and sell off. There was some break around here and a break around here that we might want to be worried about, but you could always move your stop loss to break even if the stock bounces off this level and starts going against you. 98.43 is the R6 level that Megan was also looking at for a break, and that also confirmed her idea to play the stock to the short side. Now, the way you can play these trades is in two ways. The first way to play these particular stocks or these particular trades is the moment they break the level. So around here we're breaking the R6, around here we're breaking these R6, and you could play the stock to the short side down here. What is your stop loss when you play these stocks? 10% of the average true range. So the average true range on BABA is approximately $3.60. Therefore, your stop loss will be somewhere around 36 cents, which is somewhere around 98.80, which would give you some room if the stock goes against you. Another way to play the stock is after it breaks the level, and that is the safest way, and that's the way Megan played it. You wait for a pullback into this level, you make sure that the level is holding, and then you get your entry. So you could see that the stock is pulling back into the level, you could see that the level is holding, and that is where you could play the stock to the short side. How do we take partials on this particular strategy? There are many ways that you could take partials. Find pivot points, key levels based on the daily chart, key levels based on the pre-market chart, or maybe some moving averages. Another way to take some partials is if the stock, for example, gave you some good risk to reward ratio. So if your stop loss approximately around here is 36 cents, you could go for a profit target of approximately, let's say, 72 cents. And now that the stock made some decent move in your favor, you could start locking in some profits. So that is basically it, guys. So let's do a quick recap. When you're taking higher time frame trades, what you need is 1. Analyze the daily chart and the weekly chart and make sure that you are having an idea or a level or a range to play the stock from. Second thing you need is an intraday pivot point that is paired up with the daily level or range that you found. The next thing you need is a range in the pre-market that is also paired with the pivot point and the daily level to give you some extra confirmation and so that you can get some momentum if the stock works in your favor. This way you can have the bigger, higher time frame traders along with day traders, along with swing traders seeing the exact same thing, which should give the stock some more momentum. Your entry is at the breakout area or at the break of the pivot point that you're looking for in the pre-market. The moment you get into the trade, your stop loss is 10% of the average true range on the daily chart. Your target is a decent risk to reward ratio, for example 2 to 1 or 3 to 1, or a better way to manage your trade is by using some intraday levels, pre-market levels, pivot points, moving averages, or anything like that. I hope you guys enjoyed this recap. If you have any questions, please feel free to email me, ayman@beerbultraders.com. Make sure to hit the like button, share, and subscribe to our channel. Make sure to follow me on Twitter at AymanBBT. I'll be more than happy to help you and share my trades with you. Have a good day, guys, and I'll talk to you in the next video.